Hello guys, just wanted to give you an update about the Bitcoin price and how that is affecting the crypto market in general, what caused this huge dump or what may have caused it, and where we might move from here. So let's go ahead and look at some important points of support and resistance and areas that I have marked in the chart. So here we go. I know it might look a little bit confusing at first. Let's break down what this means. So the price, this is the daily Bitcoin chart, okay? And the price was in an uptrend, okay? Was in an uptrend until this point. Of course, we have minor corrections over here, but none as big as this one that we've experienced 2 days ago, okay? And the price got rejected here, almost touching the $3,000, $53,000 mark. It got rejected, and we saw this huge daily candle, which size was, without counting the wick, was the same as the previous 5 candles combined. So this is a huge dump for the Bitcoin price, and I'm not gonna lie guys, this candle is a bearish engulfing candle, but I'm going to talk about why we still don't need to worry about you know, going further down and maybe entering into a bear market, as you know, many people might be saying on Twitter, which I don't check out anymore because it's a bunch of nonsense. But yeah, so the price, there's a reason why the price got rejected at this level right here. And if we pan out over here, I have plotted a Fibonacci retracement, and I will do it again so you guys can see what I'm talking about. So when you, for those of you guys who don't know, Fibonacci retracements, Fibonacci is a good tool to that traders use to kind of predict where the price might go, to predict important levels that the price might go. So when you plot a Fibonacci retracement, you use the highs and the lows, and you can choose which highs and which lows you use. In this case, we're not going to use the historic lows, of course. We'll just use the all-time highs and then the lows from this market correction that we had around April and May, okay? And we can see here towards the left that a few Fibonacci numbers appear, and the two numbers that we want to keep an eye on are these two right here, the 61.8 and 66.67. Many people use 66.5. I found out that the 66.67 works better for crypto, and they're very similar, so don't worry about if you guys are using the 66.5. It's just a personal preference. But if we see right here, this the area between these two levels is called the golden pocket, and it's an area that the price tends to gravitate to. And and we can see here that the Bitcoin price got rejected just around the golden pocket. So this might be what caused this huge dump in the Bitcoin price, which maybe originally wasn't going to be that huge, but many people are trading with leverage, as you know, and many people got probably liquidated at around these levels, causing the price to drop even more. Okay, let me get rid of this Fibonacci right here for a second, because I'll show, this is another Fibonacci that I'll get into you know, soon. But so I want to talk about this right here. Now the price is in a range between this yellow line and this white line. The yellow line is the moving average of 50 days, right? And the white line is the exponential moving average of 20 days. You guys that have followed my market updates for a while now know that I love using these moving averages, especially the white line, the exponential moving average of 20 days, since the price tends to bounce from there many times. And this time right here, actually we couldn't actually bounce. We crossed below this, and however, the price was supported by the moving average of 50 days, which also coincides with the exponential moving average of 20 days on the weekly chart. And this is extremely important, guys. If we go to the weekly chart, we need to maintain this level right here. We need to maintain the weekly candle above the exponential moving average of 20 periods over at the weekly chart. That means exponential moving average of 20 weeks. And we don't want the price to close below this on the weekly chart. It might wick below this, but to stay bullish, we want the price to stay and close above this. Okay, as long as we don't close below that, we are safe. Okay, we're still on an uptrend, so we still don't have to worry. Okay, and so where is a good level to buy Bitcoin, right? For me myself, and this is not financial advice, guys, I want you to remember this. This is my own opinion. Okay, I will be buying a little bit when the price hits again this 50 day moving average right here at around 44,800, and then I will buy a little bit again here at this support of the week, which is also a Fibonacci level over here, the one that I showed you before, the 38.2 level at around between 42,600 and 43,000. So I will be buying some Bitcoin over there. And then there's another thing that I need to talk about. So if we do another Fibonacci from this high, from this low right here to this high, and I want you guys to see something. This level right here, the 150 Fibonacci, is a level that not many people use, but I use this level, and I use the area between the low and the 150 to determine where the price might trick us, where whales might make us think that the price is going to go bearish when it actually is just going to wick, going to look for liquidation, and then continue going up. So the price might wick to this area right here between 38,000 and 43,000. This is possible. You know, it's not very likely, but it is possible that the price might wick to this area around here. As long as the weekly chart doesn't close around this area, we are safe. Just a wick. So what I want you guys to know is that I will be putting some buy orders at around this area as well for long-term accumulation, buying Bitcoin at cheaper prices. Okay, around this area right here. So I will have buy orders all the way from this level right here around 44,600 and 38,000. Okay, and I don't think the price will go lower than this. Okay, that is very unlikely. So we still don't have anything to worry about, guys. This is a healthy correction, and this allows us actually to continue moving up. Without a correction, I would have been a little bit worried about a bigger correction coming up in the future, but this is a correction, a much needed correction for the Bitcoin price. Just be careful with this candle right here. I wouldn't recommend trading much today, especially I didn't make any trades, and the reason for that is that the price is just ranging, as I mentioned, just ranging right here, having a lateral movement, and the 20 EMA on the hourly chart is keeping the Bitcoin price here. The Bitcoin price still hasn't managed to break above this, and that causes the whole crypto market to just stay in a range, which is not good for trading. So I'm just keeping calm, looking at the market and waiting for the next movement. I suggest you guys to do the same. Guys, before I finish the video, I want to cover the bullish scenario, the immediate bullish scenario, because we might very well see that as you know, in the next few hours or days. And that is if we see a green candle, okay? Let me just draw it here. That is if we see a green candle going past, you know, a green engulfing candle, which is bigger than this red candle and actually goes above the 20-day exponential moving average on the daily chart. If we see this, then this is a bullish sign, and we can actually enter, you know, enter a trade, okay? Manage your risk, okay? This is a risky trade, but we could actually enter a trade with a stop loss below the 50-day moving average and the take profit at around here, as long as it gives us a risk reward ratio bigger or equal than 1. As many of you guys know, have listened to me talk about the risk and reward ratio. That is the bullish scenario, okay? So we just gotta wait and see for Bitcoin to get out of this range and see what happens from here, okay? But that was all for the video, guys. See you next time.